Now, what we want to look at is Zimbabwe's resolve by the Apex Bank to extend its multi-year currency policy. Now, Zimbabwe's Finance, Economic Development and Investment Promotion Minister, that is Mthuli Ncube, said that the refusal by banks to lend money both in Zimbabwe dollars and in the United States dollars prompted the government to enact Statutory Instrument 218 of 2023, which extended the use of the multiple currency system to December 2030. Now, Kubi said this during his presentation at this year's pre-budget seminar held under the theme Consolidating Economic Transformation at the new Parliament building. Now, disorder was beginning to emerge in the country's banking sector as banks were now refusing to lend money at all, some of them in USD, to the government. Of course, the government now thought to release some of the pressure from the markets to restore the order by using the statutory instrument. So this morning, I'm being joined by Dr. Prosper Chitambara, Developmental Economist from Harare, Zimbabwe, who will be telling us why the government has decided to do this and what's attendant implication it will have on the country's economy and, of course, the legal tender. Dr. Prosper, thank you so much for joining us.
Thank you so much for having me.
Persistently high inflation, elevated interest rates, and a slumping, volatile Zimbabwean dollar have all combined to fuel a cost of living crisis in the country. And when you look at the salary of workers in the country in local currency, some have actually lost about 70% of its value since the beginning of the year. So what are the factors responsible for the deplorable state of the Zimbabwean dollar?
Well, it's been affected by unsustainable growth in Zimbabwe dollar liquidity or money supply in the economy, which has resulted in the loss of value through inflation of the local currency. And as a result of that loss of value, we have seen economic agents ditching the local currency and preferring to transact and to hold their value and their wealth in United States dollars. And of course, we must also emphasize that we are in a dual currency framework where government has allowed for the use of both the local currency, which is the Zim dollar, and the United States dollar. But because of the chronic high inflation, economic agents have actually lost confidence in the local currency. So they prefer to transact and to store their value in the United States dollars. So I'd say the wars of the local currency have been caused by the unsustainable growth in the money supply, which has driven Zimbabwe dollar inflation.
Now, economists also say that Zimbabwe is plagued by a weak budgetary process and that the economy can't generate more government revenue as a result of this. At some point, we heard that the budget shortfalls were financed by printing money, which undermined the independence and credibility of the Apex Bank in the country. And that also impaired the central bank's ability to fulfill its mandates, including the stabilization of the currency value. So is it safe to say that the government actually shot itself in the leg with the policies and the different plans overtly and covertly for its economy, and you will say that it is solely responsible for the poor performance that we have seen in the legal tender?
Well, there has been a lot of pressure, obviously, on government, given the fact that the degrees of economic fiscal freedom, rather, are a bit limited. Government obviously can't borrow money offshore. So government has actually been forced to mobilize resources domestically through the taxes and also through the creation of money. So it's really the creation of money that has resulted in the challenges that we are currently experiencing with respect to the inflation. So government is really in a very difficult situation. It's a catch-22 situation in trying to manage its finances and also trying to mobilize resources for critical projects and critical expenditures, given the fact that we are actually not able to borrow at concessionary rates from the global financial markets. We have a huge debt stock estimated at about $17.5 billion. And of course, there are also targeted sanctions which have increased the risk premium that is actually attached to Zimbabwe as an investment destination. So it has made it difficult for government to be able to mobilize resources. So government has been forced, like I said, to either print money to seek recourse to the central bank, or to introduce a number of taxes to the economy. Of course, that has had adverse implications in terms of when you look at the taxes, the tax burden, the huge tax burden, has also contributed to increasing the cost of doing business and to the informalization of the economy that we are also seeing. So our economy is now largely informal. In fact, it's one of the biggest informal economies in the world, according to the International Monetary Fund.
Let me just quickly refer you to a particular currency conversion size that is called XI. We said that a US dollar is about 361.900 Zimbabwean dollar. Now, before now, there have been the clamor for workers, as you said earlier, to be paid in dollars due to the depreciation of the Zim dollar. Now, the August presidential election has come and gone, and that also had an influence on the value of the Zimbabwean dollar. But then I'd like you to just do a bit of breakdown. How did these factors, these demands, and of course the election cycle in the country influence the value of the local currency over time? And what are the prospects now that we are seeing a bit of shift in what we are seeing in the economy?
Yeah, so with the elections, obviously, public spending actually rose, not just election-related public spending, but even non-election related public spending. Normally, in an election year, we see governments tend to be onerous. So spending in general tends to increase in an election year. So obviously, the fact that public spending in Zim dollar terms actually increased also resulted in a demand for the United States dollars. Because what's actually happening is that anytime there is actually an injection of Zimbabwe dollar liquidity into the economy through public spending, the people that are actually receiving that money, that Zim dollar money, are then forced to convert that into United States dollars as a way of trying to preserve value. So that conversion then increases the demand for the US dollar, which also causes the local currency to depreciate against that US dollar. But of course, now that elections are over, we are hoping that there's going to be a moderation in terms of a pressure on public spending, but also with prospects of an El Nino, which will probably result in a drought. That could also then again result in government public spending actually increasing as government seeks to mitigate any adverse impacts of the forecast or the projected El Nino. So there are serious downside risks. And we've also been seeing the increase in the price of fuel, crude oil, that also impacts negatively and adversely on the Zimbabwean economy. So yes, the elections are over, but I think there are still pressures, especially from the agricultural front because of the El Nino that we are forecasting, or that is actually being forecasted. And also even external factors, geopolitical developments have caused the price of crude oil to increase. And we are also feeling the pinch of that in terms of increase in the cost of production, increase in consumption, in the cost of living, and ultimately that erodes the competitiveness of our economy.
Okay, Doctor, to just wrap things up now, we see that the financial institution in Zimbabwe has refused to lend money both in Zimbabwe dollars and United States dollars. And in response, the government enacted statutory instrument which extended the use of the multiple currency system, of course, to the country. Now, what do you think this would mean for the financial system in the country? Is that a setback? I need your response in just about a minute. Is that a setback for government's plans to address the currency issues? And what do you think the prospects are? Just in about a minute, sir.
No, I think it's a positive development because it brings clarity to the uncertainties around the currency issue. It also provides an incentive for banks to begin to lend to businesses and even to households and to individuals for productive purposes, either to borrow money for mortgages or even working capital requirements of businesses. So I think that clarity was needed because there were a lot of uncertainties which were actually eroding confidence in the local currency and also confidence in the local economy.
Now, well, it's been said by some that the administration of Emmerson Mnangagwa actually chickened out by deciding to roll back the multiple currency policy to about December 2030. And that has fueled the speculation of if the country will be able to achieve a monocurrency system anytime soon. But then that's going to be another discussion for another day. Dr. Prosper Chitambara, Developmental Economist from Harare, Zimbabwe. We'll hope that when we call on you, you will oblige our call to shed more light on things like this.
Thank you so much. So it's a pleasure.
Okay.